Hey everyone, it's Jerome Dadon, the CEO of MezFi, here today with episode 1 of MezFi Minis, a new series where we go through headlines, topics, and storylines from Australian and Pacific crypto, blockchain, AI, financial services, and property. What we're going to do is start with the headlines from last week's MezFi Morning Brief. So let me just get them up here. Great. So here we are, MezFi Morning Brief. For those of you who don't follow us on X or LinkedIn, every Friday we post 3 headlines from Australian financial services property news. The guys compile the news headlines really nicely. They've been doing it for 6 months, a year now. So always really topical sort of news. This week, I'm not sure how many of you would have gone. It was a couple of weeks ago now, actually. It was the AFR Crypto Summit on in Sydney, and I wasn't able to go. Unfortunately, I was at Token a few weeks ago, which was an amazing event. Token 2049. I would suggest anyone that enjoys cryptocurrency, blockchain, and number one, obviously has a business in blockchain, but is interested in the scene, the community, to go, because it is just the most amazing festival of everything blockchain related. I've heard a lot of people say, and I haven't gone to a whole lot of events around the world, but a lot of people have said that it's the preeminent blockchain event worldwide, and I can vouch for how great it was. MezFi, we ran a couple of events, side events, ourselves, and I went to the main couple of days as well, and that was really great. So anyway, I was at Token, and so I got back late to Australia, so I wasn't able to go to the AFR Crypto Summit. However, our metaverse chief architect, Simone Leonelli, was there, and he gave us some great insights. One of which was, honestly, not exactly new, because last year I went, and it was a very similar kind of feedback from Treasury, which was that it is likely to see all crypto businesses, crypto exchanges, crypto businesses will need an Australian financial services license. So I guess, unfortunately, fortunately, it's a matter of opinion, but Australia hasn't decided to go down the route of places like Dubai, where they've created a fit-for-purpose, bespoke digital assets licensing regime, VARA. In Australia, they're planning to bolt on, crypto parts, I guess, to the Australian financial services licensing. It's for better or worse. One of my MezFi Meets podcasts goes through this with John Basilios. He has particular views. You can check that out. I'll put it in the links below. So basically, that was the big takeaway, and here, as you can see, the first headline is that ASIC says all crypto startups must have financial services licenses. So, like I said, not massive news there, because that's what they said last year, and they're just reiterating it again. It's worth noting that they have had a few failed lawsuits against yield generating products. They're not totally failed. There was 1 or 2 that got up, but ultimately they haven't been able to stick really huge judgments against crypto firms so far. But ASIC is very clear that they're going to be getting all crypto companies to be licensed with AFSLs. We know what that's about, being a corporate authorized representative. It's a lot of burden. It's a lot of financial, insurance, commercial burden, and not all startups can necessarily take that. A lot of it is therefore. Sometimes it means that some of the businesses that would otherwise fail can weed through the cracks if there's no licensing. So that in a way, I guess with the licensing, I guess you may have a cream rises to the top kind of mentality, but I'm in two minds about whether it's a good thing or a bad thing. In terms of investor protection, I mean, obviously a good thing for there to be strong compliance teams. But in terms of the capacity for new businesses to flourish and new ideas to flourish, it may be that it's too onerous, but time will tell on that one. So we'll see what happens. Second headline for today: the Commonwealth Bank of Australia is interested in crypto, but a long way to go in Australia. Australia's biggest financial institution, the Commonwealth Bank of Australia, has announced several ongoing projects in the Web3 space. In particular, CBA is experimenting with stablecoins and tokenization for settling transactions both locally and internationally. However, the team's head of digital assets says that politicians must be willing to update older legislation before national regulators can begin to foster innovation within the country. It's a bit funny because I know that Commonwealth Bank had set up a few years ago, I think it was a Bitcoin, a capacity to buy and sell Bitcoin within their native, within their app, within ComSec, I think it was. And then they abandoned it when, I think it was when FTX happened and a few other things happened there. So it's funny to see CBA get back into the space like this and saying that politicians need to be willing to update all the legislation. It's probably true. In Australia, again, the AFR Crypto Summit, they did another big narrative was, which I think, has been that way for a number of years, is regulatory clarity. So, updating laws, needing to have proper laws for everything that we do in crypto. I think it is super important, obviously, in a bank the size of Commonwealth Bank, and obviously Australian banking is quite, shall we say, conservative compared to some other countries. And so I think good to see Commonwealth Bank, excuse me, getting back into it. It'd be great to see all of the banks pushing harder into the crypto space. But their loss is the rest of our gain, I guess, because we're all innovating and pushing and trying to build better rails and better companies and better services for people using crypto. So whether the banks get into it or not, I guess not really too worried about it at the end of the day. And finally, for this week's headlines, the RBA shifts focus, drops retail, CBDC, prioritises wholesale in new roadmap. Look, before I even go through the headline, I mean, that's the headline. Before I even go through the body, it's no secret that retail CBDCs are not overly popular. CBDCs being central bank digital currencies. The reasons for that are many and varied. Obviously, you've got issues such as the programmability, of the currency, and on the one hand, that makes it flexible and it makes it able to do interesting things. But on the other hand, the government can track what you're spending. The government can potentially stop you from spending your money if you don't meet certain criteria, if you've spent on too many things, etc., etc., etc. Not that they can't do that already if they wanted to in countries like China. Without a central bank digital currency, they already do a lot of those kinds of things. And I guess fundamentally, from my perspective, whether something like a central bank digital currency can be trusted really just comes down to the quality of the government that you have and how much you trust that government, because really every government has the capacity to abuse the power that it's given. and the technology that it has as it's at its disposal. And there are a number of governments that have done so, and there are a number of governments that have decided not to do so. So from that perspective, I think CBDCs they're just a tool at the end of the day, but I think that it's true that most likely the best use cases for CBDCs will be found in wholesale. Hence, and I'll read the Reserve Bank of Australia Assistant Governor Brad Jones has said that the bank was shelving plans for a retail CBDC in Australia, instead opting to focus on a wholesale CBDC. He said a wholesale CBDC could provide significant benefits to the banking system, including reducing counterparty risk and improving transparency. I mean, that's true. I mean, stablecoins in general are great at reducing counterparty risk and improving transparency. And so, I mean, obviously, the same would be true for a central bank issued digital currency. I think inevitably we will see testing and tests with CBDCs, wholesale, and in some places retail. I mean, I know the Donald has very famously come out being very pro crypto now, but I think that he had a very anti CBDC stance, and I mean, we don't know whether the Donald is believes everything that he says. So who knows whether he believes that the retail CBDC is actually as bad as what his policy would make it out to be. But it's definitely, if you talk to certain people, they're extremely worried about the potential harm that could come from a central bank digital currency and the tracking from that and a number of other things. So, I mean, that's it for the headlines this week. I mean, a couple of topics, I guess. So, like I said, Token was a couple of weeks ago, which was amazing. AFR Crypto Summit happened about a week ago, maybe 2 weeks ago now, actually. In a few weeks' time, we'll be doing a Brisbane meetup with Darren Rogan. He runs a Brisbane Web3 meetup once a month, and we'll be there in Brisbane for that. Early November, we may be back in Singapore for the Singapore FinTech Festival, which is always a great time. Lots of amazing stuff. I think there was 50,000 people who attended last year. So huge event in fintech. Not as big for crypto, obviously, as Token, but still Singapore is such a hub for financial services and fintech in general. And then I'm really excited for Australian Crypto Convention at the end of November. MezFi, will be taking a stand. We'll have a stand at the Australian Crypto Convention. We'll be running some giveaways for tickets, and we've got a couple of exciting things lined up for the Saturday and the Sunday. And as well, we have some exciting news lined up for the Friday night, which I won't reveal just yet, but keep your eyes peeled. Keep watching our socials and listening for news, because we may have a big announcement about that. All right, guys. Well, glad to take you through the news headlines in crypto, blockchain, AI, financial services, property for this week. Next week I foresee having another MezFi Meets episode lined up. We've got a new team member, Jared Pine. Used to work at Commonwealth Bank, which is funny considering the news headlines today with Commonwealth Bank. But Commonwealth Bank, Norton Rose, a lawyer, economics major, did an economics degree, did a law degree, and comes to us really excited about mezzanine finance, democratizing access to mezzanine finance products and alternatives in general. Super smart guy, and we caught up at Token. Had a great chat about a number of different things in the financial services space, his background, crypto, lots of different stuff. So look forward to that. All right, guys. Thanks so much for watching. Look out for our launch coming up really soon, and I'll see you next time. Cheers. If you'd like to find out more about MezFi, go to www.mezfi.com.